What's up, Cloud Life? How we doing? This is the support and resistance and identifying supply and demand section. We in this section we will be learning what is support and resistance and how to draw it, and also understanding what supply and demand is. This is the foundation of the market and the showing structure of the market and understanding it in a deeper meaning when we are applying it to our day trading. So let's go ahead and jump into what support and resistance is and supply and demand and get you guys trading like pros. So here, what is support and resistance? These are areas found in any typical or any type of market, whether that be Forex, stocks, or crypto, whether it is a trending or ranging market. It's one of the main aspects of technical analysis. Support is when price is in an area where buying demand exceeds selling supply and price stops or reverses at. This can be identified when finding a series of bare fractal points where price falls to this level and fails to fall further. So think of support like the floor underneath your feet, and it's the price hitting the floor. Resistance is the opposite. It's an area where selling exceeds buying and price stops or reverses. You can identify this when price rises to a bull fractal and fails to move any higher, making this a possible resistance level. So, when confirming an area of support and resistance, this area must test this fractal area with 2 points of contact or more. So, you have to understand that the market has to touch at least two times of more of contact to be a proven level of support or resistance. So there's two types of support and resistance. We have static support and we have static resistance, and we have dynamic support and dynamic resistance. Static support or resistance levels aren't moving levels and are horizontal in nature and also can be diagonal. And we'll go over the different types of looks of what that looks like of static support and resistance. Dynamic support and resistance are levels that are moving. So think of like your moving averages or any indicator that moves that's on the chart, like Bollinger Bands, Ichimoku, EMA, 100 EMA. All those are considered dynamic. So we'll take a look at some. So here we see an example of static supports and resistance, a horizontal line. You see how price is holding into these levels here. You see how it's holding, and you see how many times fractals have been touched. The fractals are these little black triangles that you see. So these are areas of support and resistance that we could identify here. And here is a diagonal level of a trend line support and resistance, where you see resistance is on the top and support is on the bottom. And you see it has multiple contacts, one, two, three, four, and then so on up here. And you see it has multiple touches here as well. So this is a diagonal support and resistance. As you see here, it's making a channel. So here we have dynamic support and resistance, where you see the Ichimoku system is being used as a support and resistance. So the green area, as you see, the Kumo cloud is showing it to be a resistance. You see price dropped. Then you see here the Kumo cloud is acting as support in the red bubble, and you see price bounces off of it. And you see here blue as well bounces off of it as well. So these are different areas of support and resistance as dynamic. As you see that the cloud moves, it's a moving indicator or system. So this is also a area that we could see price bounce off of as well. And you see the Tinkinson and the Kijinson, the red and the blue line, are moving averages in here, are where you see price could jump and bounce off of as well. So moving on to the next phase. Supply and demand. All right. A supply zone is an area where there is an increase of selling pressure, and as supply increases, the price decreases. And demand is a zone where the area where we find where there's an increase of buying pressure, and as demand increases, the price rises. This is supply and demand create market equilibrium and disequilibrium. Supply and demand is what moves the markets, and supply and demand is what keeps the market also moving in a consolidation phase as well. If there's an equal number of both, that means the market's in equilibrium. If there is a number of buyers in the market that are higher than sellers, that means the demand is there and the market's going to be in disequilibrium. So there's four kinds of supply and demand zones. All right. What are the four types of supply and demand? So we have two, which are reversal patterns, and then we have another two, which are continuation patterns. So we have a drop base rally, which is a reversal, which is bullish reversal. We have a rally base drop, which is a bearish reversal. We have the continuation patterns, which is drop base drop, and then we have a bearish continuation, which is a bearish continuation. Then we have the rally base rally, which is a bullish continuation. So let's go into further detail on what these are. You're probably thinking, what is the base? All right. So here we have a drop base rally, which is one drop would be one leg down, base would be your consolidation, and then the third part would be the rally, which would be your second leg up. So the drop is the initial leg. The base is the demand zone where buyers are entering into the market. We call this the accumulation zone or the base. So if you don't remember, the base is called the accumulation, which is where we see buyers are entering into this market, and you see they rally the market to the upside. Here we have a rally base drop. So a rally base drop, rally would be one leg up, the base will be your consolidation, the drop will be your second leg down. So we have an impulsive move here. We have the suppliers distributing. So this is a distribution zone in here. So when they're distributing the whatever stock or currency, we have another drop, which is the seller pressure here. And you see the market drop to the downside. So here's another one. We have drop base drop, which is where you see it will be one leg down, the base, which would be your distribution zone. And then here you would have your second leg down. So this is a continuation pattern. You have that drop, distribution zone, and then you have another drop in here. And be careful of manipulation because these areas are dangerous when it comes to manipulation. You could have a breakout, then a pushback inside. But usually that manipulation is just an indication of the direction that it really wants to go in. So it was an early breakout, then they push back in, then they drop to the downside. Lastly, we have the rally base rally, a bullish continuation, which is a rally which will be one leg up. Then you have your accumulation base, which is the consolidation, and then you would have your second leg to the upside. So you have your rally, accumulation, and then another rally. All right. So now let's look at some live charts and see how to draw support and resistance and identify supply and demand zones. All right. Stay tuned. Welcome back, traders. Now we are looking at the live chart on how to find support and resistance and how to draw that up. For some of you guys that are new to the Ichimoku system, we'll start off with basic support and resistance without the cloud. So when we look at this market, you're probably starting, where do I start off? Where do I find support and resistance? Now, if you want to find support and resistance, you look at the closest price right here, which is the current candle. Zoom out on your chart and really find a area that has touched multiple times. So as we're looking at this chart, we could see that there's a cluster right here of fractals that have been touched. So we could identify this area as a support and resistance. So it has been touched once, twice, three times, and another one here and here. So we know that right here is a fine level of support and resistance. We could also mark the highest point of the market, which is right here. And we could also go towards the lowest end of the market right here, which is also support. And we want to keep it relatively close to the current price. So there's so many levels of support and resistance. We could even argue and say right in here as well. So another way to draw support and resistance, because support and resistance is not exactly a line, it's a level or an area. So you see how there's fractals in here. So we could actually zone it and box it in like this. When we do that, let's go ahead and clean it. Let's do this. And there we go. We have a zone. So you see how price held here? If we look at it, touched multiple times in here, touched in here, right here, and here, and here as well. So this is a fine area of support in a support. We see that if price is above it, price is going to act as support here, and you see the bounce. Came down to support, see the bounce. And now it broke through. Now it is acting as resistance here. But it broke through, and then now we have a resistance here, here, and here. So this is how you can find some areas of support and resistance as well. Another thing, if we want to look at the market, if we were looking at our supply and demand zones, usually you want to pay attention or find areas where the market is in consolidation. So like in this area or this area. And you want to wait for the market to break outside that consolidation range. And when I say breakout, you don't want the initial break. You want to see a clean breakout, and then you want to see what the next candle is going to say. So in this instance, we have a rally, then we had a accumulation phase, and then another rally to the upside. So usually the rally or the next breakout is going to be equivalent to the initial leg. So we could actually say the leg started here, and you see that, look, it's equal to this amount of the movement here. So, all right. And then you see here was the leg, this distribution, and then the leg down. These pretty much equal the same ratio. All right. This doesn't necessarily mean that it's always going to be the exact same measurement, but it could be close. All right. We have another one over here. If you look here, we had a rally, our base, which was our accumulation, and then another move to the upside. So we had our first leg, our second leg, and accumulation. All right. So these are things that we do want to pay attention to, be mindful of when we are looking at these charts. But when we are trading, how you want to trade support and resistance, you want to look at the candles. And this is the most important phase, is reading the candles. And that's the next phase that we're going to go through in this series of learning how to read the chart. So stay tuned for price action and understanding how to read candles. That's going to be the most important part of understanding the market. All right. God bless you guys, and stay tuned for the next. Peace.